Hello there and welcome to the week ahead. I'm Elaine Stenson. Today I'm joined on the line by Bob Slade, Managing Director of FXDD in New York, to look ahead to what will shape the financial week. Bob, last week the FOMC minutes were released and the markets have seemed to take on board that the Fed is still prepared to taper at one of the next few meetings. Meanwhile, the full Senate Fed chair nomination vote is expected on Thursday. Bob, how will this affect the markets?
Good morning, Elaine. On this bright and early Monday morning in New York, it's around 8 a.m., about 20 degrees Fahrenheit. So what are we, about -4 or 5 C? So it's a little cold here. Look, the U.S. markets have certainly accepted the fact that Janet Yellen is going to become our next Fed chairman. We definitely feel that she'll be around certainly for a 4-year period, if not longer. I think her hardest thing that Ms. Yellen is going to have to deal with will be the trick period of trying to wind down asset purchases going further. And I think that'll be one of her, largest challenges. But again, the Fed's made it quite apparent that the idea of tapering will not even take effect until sometime after the second quarter of 2014, and that just all depends on how the economy looks.
Okay, and do you think the second quarter of next year is the most likely time that tapering will be introduced?
That's at the earliest. I think you could actually see it extended depending on truly how the economy does and if jobs do build and if we get the momentum that we're looking for in Q1.
The Bank of Japan's monetary policy meeting minutes will be released on Monday. The Bank of Japan Governor Haruhiko Kuroda says Japan's recovery is already on track. What are you expecting from the minutes today, Bob?
Well, I think policy is going to be somewhat kept steady the way that they have thought about it. Bank of Japan's Governor Kuroda has definitely commented that he likes to see the inflation target of 2%. He'd like to see that reached by 2014, early 2015. Certainly, he has expressed willingness to adjust his quantitative easing if necessary, up or down, depending on the risks. We definitely think they're going to be looking for CPI will continue its ultra easing policy in coming months and years because they really want to achieve that 2% inflation target to make the economy and the markets stable over there.
Okay, and over in the UK last week, the Bank of England's chief economist Dale Spencer said that the UK economic recovery will take a number of years, even though we've seen very positive recent data from the UK. He also said he does not foresee a housing bubble. The Bank of England publishes its twice yearly financial report on Thursday. What are you expecting?
Well, I think there was an interesting comment last week, not only his comments, but Bank of England's Bean made a comment that they are in no rush to raise interest rates. He made it a very interesting analogy. The UK economy currently it's off the ropes, but it's not yet it's not yet in full fighting form yet. So they have a lot of work yet to do and to get the British economy stable, and I think the comments that they have a long way to go yet is, to say the least, right along in the same instance as the ECB in the U.S. All of our economies certainly need some tweaking to get where they need to get.
Bob, you mentioned the ECB there, and the European unemployment rate is out on Thursday. Should we be concerned at all?
I think we'll see their unemployment rate somewhat stable. What's always concerned me in the entire European region is that youth unemployment. That youth unemployment in Spain and in Greece is just astronomical numbers. You know, you'll have Spain's unemployment at 20-something%, but their youth unemployment 30, 40, 50%, along with Greece. So that to me is always a major concern of what are we going to do with all these younger people who are now coming into the marketplace with formal educations and no place to go. And that's always a problem.
And finally, Bob, what other US-based event will you be looking out for this week?
I think, you also have to remember that the U.S. this week is going to be a little quiet and a tricky market come Wednesday afternoon due to the U.S. Holiday, Thanksgiving holiday on Thursday. So we'll start seeing things quiet down in the U.S. markets by lunchtime Wednesday, and we both know Friday is a fairly quiet day. Economic news-wise, actually, I'm even just looking at the calendar, realizing there's so little that of importance that's on the plate later on this week. I don't think it'll be I think the U.S. is certainly, we'll have PMI in Chicago and consumer sentiment, and we'll certainly have durable goods data coming out on Wednesday. But as I said, remember, liquidity in markets are going to be somewhat thin as we roll through this holiday weekend with the U.S.
Okay, Bob Slade, thank you very much for joining me on the line this morning. And that's all for the week ahead today. Make sure you keep an eye on Dukascopy TV for the week, as we'll be covering all these events and much more. Bye for now.